I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, this was a week of some huge disparity and continued good-sized moves in the markets as the post-election reshuffling continues, as many investors and fund managers have found themselves on the wrong side of markets, being so used to, well, the Obama market that we had for all of those years and the potential for the big change as we move into the economy that Donald Trump is promising to bring, at least. Stock market, 11 straight days on the upside as far as the Russell 2000 goes, as money moves into very, risky assets, we'll call that, much riskier than they're used to being in, as, you get the bond market falling, gold market falling, and the money that was parked in there really moving into these stocks that are really third-tier stocks, as they assume they're going to benefit from coming growth and the change in fiscal policy. So just a big up move. The Russell up 13% in just this period of 11 days, up about 2.5% on the week, as most of it was in the previous week. S&P 500 moves up within 4 points of its all-time high at 2193, and up less than 1% on the week. Dow Jones Industrial average about even on the week, as some of those industrial stocks that had done really well kind of stall at this point. And the NASDAQ, which was very weak after the Trump victory, as fear for the tech stocks not getting the cheap labor in China or anywhere else anymore, and their costs going up, right, labor costs moving on the upside, and the fact that multinationals might suffer based on higher tariffs, all of that had the NASDAQ very weak. But the NASDAQ then reversed back to the upside also, so that one gaining back some strength. Still thinking there may be a little bit more risk in there. The transports again have a big week, up 2.5% on the week, and 9% on the week since the Trump election, as the shipping category, the rails, the stuff that moves people because they're going to have more money in their pocket supposedly, and that moves potentially coal, moves other materials for this change in building infrastructure, really does get a bid. So we saw the transportation average get strong and stay strong. The bond market on prospects of higher interest rates, Yellen gives a speech and says that it's likely we're going to have an increase very soon, which means December. And man, I am out there tweeting, I want the FOMC either gone or to have much, much less control of this economy. And Donald Trump pointed fingers in that direction, and man, I'm going to be all over it out loud if he doesn't do something. Yeah, I want Yellen gone, and all of these Keynesians in there that are been running our economy into the ground, essentially. Yeah, don't tell me about the false statistics that we've had over these last years that the 0% interest rates have created. We need to be able to get a big growth in periods of 4% interest rates or higher, and then people that have saved money actually getting paid for it rather than being penalized. Yeah, I'm all over that one too. So he's got to do something about this Federal Reserve, and let's see if he gets on it or not. 10 days in a row for the dollar, just a huge upside in there as it benefits from both higher rates and for the prospect of economic growth. Just really an explosive move in there on the dollar. And if you got in the way of that one, you've paid the price for that one for sure. The euro collapsing as the eurozone really in risk. I've mentioned that quite a bit at times in here and talked about in a lot of my videos about the breakdown in the euro, major breakdown, lots of reasons as we come into 2017, all the elections that they have in there and the prospects for some breakup over there in the eurozone. That's not that far-fetched as we get this nationalist movement that you can look at in the Brexit vote, you can look at in the election of Donald Trump. It's going to spread into Europe, and they've got a lot of problems, and that's why there's so much selling going on in the euro. Gold, well, with that dollar strength, gold continues to sink. So does silver. Gold down about $20 on the week. Silver down about 80 cents. Silver, of course, a pretty big decline. And I'm suspicious, and I talked about it this week, that soon, very soon, silver is going to begin to overperform gold, and there may be some change in their ability to buy silver, short gold in a spread that I think will work. Overall, the patterns are horrible, and I just think that silver will begin to overperform. Oil, this one gets a nice pop on the week. There is hope for a deal. There's rumors out there coming again. Tuesday, oil pops $2. That's a big gain. And then on Friday, you start to get some news that Russia is already pushing back on this. Oil gets up into a short-term sell zone, which I'll show you in the short-term view at the end of the show. So I'm not sure oil's got all that much on the upside. I'm going to talk about some refining stocks later on in the show. Also, that I think there's some trades in. You're going to want to see that in the worst of the week. So these giant shifts, tectonic shifts really, that we see going on in the market right now, I think way overdone. I think that a lot of these groups have gotten ahead of themselves, and we're likely to see some churn going on in the market. But overall, this upside lift, I think, is going to continue. The corrections and the downside, I think, will be minor, and I think that there is quite a number of weeks of the stock market still being able to get a lift. Talked about that in my Future Speak show on Wednesday about the targets that I have on the upside. You're going to want to see that. And also, I think bonds, precious metals, oil, which I think is going to fail from this area, and the strong dollar is going to continue. So all of those trends that are in place right now, maybe into getting very close to inauguration in January before we really give up on those trends. So let's take a look at our 60-minute chart of the ES, which we always show, which is the gray area of the overnight trading, and the white area, which shows you the trading during the trading session. I put all these little notes in here. I'm not going to tell you about all of them, but you can see in here as you look that there has been reasons behind a lot of these moves in the market. On Monday, stocks were mixed. Overall, they were higher still in here as you got this rally late in the day. The NASDAQ was down big, though, and it really weighed on the market when you see it in here, but that changed later on in the week. Bonds tried to bounce, and they could not hold at all. Goldman Sachs warns of potential stagflation coming, which is interesting in the fact that I don't think there's going to be any stag for a little period in here as economies get stimulated by the incredible, huge increase in taxes that we're going to be seeing pretty soon, which, man, that was due, bringing in all of that money from outside of the country, some $2 trillion, which is only going to get taxed at 10%. And all of that is highly stimulus along with the fiscal spending. So that's the stagflation. I say no to that comment that they made. Tuesday comes, stocks were starting out mixed, and the surge in oil that we had in there on OPEC optimism, that really got the rally going, and you could see as it got going there. And overall, no question about what the week looked like in there as we got that rally going. Wednesday, the bond rout really continued, and that had the markets nervous. But again, you just can't keep the market down as you get these later rallies. Bullard comes out and says rates are going up. Kashkari comes out and he says, that he wants to put a cushion in for the too big to fail banks. That's going to more than double the amount of reserves they have to have. That's not necessarily good news for the banks, as they won't be able to loan out that much money. Wednesday come, and the world markets were really flattened there. Yellen speech, she comes out and says rates are going up soon. The CPI up 0.4%, core at up 2.1% year over year. There's no way it makes sense to be at 0.5% interest rates. They're out of their frigging minds. Yeah, I've said that enough times, right? Housing starts surge 25.5%, and the bonds are, of course, weaker on all of that news. Oil up on Saudi comments about the freeze, but that doesn't last because, well, on Thursday we get that pushback from Russia. Thursday night, Friday morning. Friday bings, overnight they tried to buy them, but you get this modest correction going on. But you can see here late in the day, they still can't send them to the downside at all. RUT still stronger on its 11th day to the upside. Here on Friday, up over 5 points. Even though the S&P 500 is down about 3 points. So they are still buying those level 3 tier stocks, third tier stocks for sure. And gold and silver are weak again, as you see this day that's just simply in hold there as we move into the holiday markets, of course. Our calendar for the week, you can see earnings reports essentially have really been cut back in here as we're getting to the end of the season. Later on in the show, I'm going to talk about the retails, and Urban Outfitters is one of them I've talked about, which reports after the close on Tuesday. And what I'm going to show you in this group with poor earnings out of Gap and Abercrombie, that maybe the prospects for that one are not so good. Deere before the opening on Wednesday is another big one that we're going to get. As far as the news goes in the economic calendar, this is the big one, which is the Fed minutes that comes out on Wednesday. And then, of course, we're closed on Thursday, and we have an early close on Friday. So basically, the market is done probably by noon on Wednesday with not a lot going on, waiting for the news, the FOMC news at 2 p.m. Eastern. Then whatever move we get out of that will be probably the end of any significant moves for the entire week. So that is our opening segment in here as we look at this calendar, and I think it's a good idea if you want to have that stuff right on your desk. Just take a screenshot of that, and then you'll have stuff that we bring you every single week. That is the opening segment, and hope there was something in there for you. And we'll be right back with the best and worst stocks for the week. Best of the week, with the stock market, well, only making some modest upside progress relative to the week before. We don't have that many stocks that have made big moves. One of them I'm really proud of, which is the biggest gainer in my 320 stock universe, is Best Buy. Man, we had this one nailed. There was a lot of worry out there that they would not be able to follow through on their stronger online revenue. I wasn't so worried about that because the pattern was so bullish. and this stock absolutely soars. 16% on the week at best level, down a little bit off of its highs, but an excellent pattern that you will see right now. Here is that weekly chart in Best Buy, and you can see the cyclic patterns in here as you have this stair-step upward motion right in there, matches nicely. These timing spikes tell you we were looking for a low in that zone of time, and you can see what happened. It spikes absolutely huge to the upside. Earnings beat, online revenues much stronger. Analysts now upgrading this stock. Of course, we beat them in here, and thanks to all the people that wrote me emails that you did well on this. The next one is in the silver category. Now, silver was very weak and gold very weak, but PAAS had, a relatively good week. It bounced, but it's still in this negative pattern. Now, earnings beat, analysts have upgraded it, but you can see this red zone. We still believe this is a stock that has downside risk, just as we believe the same thing for silver and gold. Now, the oil market got a bounce, right? And the stocks that most got a bounce in that group were the offshore drillers. Man, that has been a group that's been in terrible shape. And the patterns in there have suggested that there was going to be some rally in there, and there certainly would get some help if there were a deal out of OPEC, which we do doubt is coming. I want you to look at a few of these in here. The first one we're going to look at is Noble Corp, NE in this category, and we think this is actually bottoming and actually a really good location for it. So, the overall pattern has been extremely negative. I mean, this massive downtrend that you see as the stock falls all the way to 445 from in the 20s just in the last couple of years. Now, this dotted line in here, well, that is the drilling group essentially, and the other line in here, the purple, that is the NE pattern. And you can see that, the drilling group pattern has been up right there overall, and now you have this upward turn. Let me take a little closer look for you in here, and you can see this morning star pattern that's formed in here. So Noble Corp moves to the upside 14%. We think it's pretty good. NBR is another one to look at in this category, NBR and the offshore drillers. And look at this massive head and shoulders breakout that we have had on there for all of these months, suggesting that that was coming. You can note the cyclic action right in here. It makes a bullish pattern right in here. See that? And then another bullish pattern. You get the breakout. This probably extends up here, pulls back, and then eventually makes that measurement over $18. Of course, this is a weekly chart, so that's going to take some time. Diamond Offshore up about 9%. That's a weaker pattern. And take a look at RIG, which is Transocean. There's that same inverted head and shoulders, and look, it's just getting outside of there. You can note that we were looking for a low to come in this time zone right in here. So that's right in here. You could see that. And there's your low there, turning up and breaking out. This stock has a lot of upside potential. Could get to $17, $18 in coming months. It's only 11, so I think this one is a good pattern also. In the airline category, these stocks have done well. Warren Buffett has come out and said he liked them, and he added to his position. This is United Airlines. You could see the cycle brackets on the bottom that show the lows due in United, American, and Delta. That suggests a pullback coming in these next several weeks. If we get a pullback, we think it won't get below this minor 23.6%, and then moving up again. As the transportation index, as we talked about, is a tower of strength right now. So we're looking for minor pullbacks in here. And United up 12% on the week, and the whole group really relatively strong. JetBlue, LUV, that's Southwest, all up about 7% on the week. In the semiconductor category, we've been bullish on this group also overall. The reason being that, the mobile category is just absolutely exploding. And we saw Micron really get on board for that and then blow it essentially, and then start to get much better and really catching up. Marvell has done an unbelievable job also. They had a big earnings beat. They've got $1 billion buyback. Their analysts are upgrading it like crazy. Let's switch over and look at Marvell. We'll look at Micron also. MRVL is Marvell Technology Group, a semiconductor. And you can actually see in here that there are bigger cycle patterns and smaller ones, really following it nicely. As we see in here that the intermediate or half cycle low came right there as expected. You see that beautiful thing? And then it turns up right over here. Really nice base that it formed. We called this base when it was forming right in here. So you get some more upside in here. It maybe even gets close to 17 where that big resistance is there, and then probably gets into some correction. I would not sell this. Take a look at my video that I did on staying with momentum, and you can see in here how upward momentum has been really solid, and it's paid a lot to be with this stock. Now let's take a look at that Micron pattern, which was up 8% on the week. This we really saw as incredibly bullish. This is a rare, what we call right-hand translation that had no decline in there. It's essentially doubling up the pattern right in here, and then it makes the low here and turns up again. See, you have here the major 38, the major 50. So between 20 and 23.5, you've got some pretty big resistance, and then you get into this corrective period. We think we're going to get up into here, roll over again, and then later on next year get some more major lift in there in Micron. One other stock that I want to show you is WYNN, W-Y-N-N. This one gets a 10% lift on the week, but you see we still have it in this negative pattern. In order to heal itself, it needs to get over 101. That is quite a long way. So it got a big rally in here on some favorable comments out of Macau revenues in China. We're very skeptical of this one. If you want to buy something in the gaming category, we think Las Vegas Sands LVS is a better pattern. That's it for the best of the week, and I'll be right back with the worst stocks for the week. Worst of the week, only a few stocks out there took any decent hits to the downside this week. The worst one is a stock that's been one of the worst ones all along, and that is the 3D printer Stratasys. This one down 11% on the week. They miss on earnings. They guide lower, and it's really been a nightmare in there. And I think it's got a few weeks more to go on the downside when you look at this pattern. You can see by these, whenever you see these two big blue spikes in there, you know that's the time frame that we're expecting it to decline into and make the low. So it's got a few more weeks of risk in here. I guess it could get back down to under 15. It's now at 1864. It doesn't have to get that low, but overall this has really been bad, and it's been in this declining phase right over here. So potential for a few more weeks on the downside in there. The next bad group for the week was clearly in teen retail, as earnings come out for Abercrombie and for Gap stores. I mean, they had big misses on comp sales. Makes sense, right? When the teenagers are out there holding up signs and demonstrating, okay, they have a right to demonstrate. I'm not criticizing that, but they're not in the stores shopping, right? They're out demonstrating, so it makes sense that they would take a hit in sales. Of course, that might come after the end of the quarter, so I could be wrong, and maybe I'm just unfairly criticizing or joking, really. But that's the buyers, right? The teen retailers, and maybe they're not paying attention at the moment, and we're really very, very focused on the election. That, of course, could change going forward, and maybe sales do improve in this group, but these hits were pretty big. First one we're going to look at, and you're going to see ugly patterns when you look at this, is Gap stores. Note this massive. Actually, we have it listed as a dark cloud cover, but right now it's an engulfing because it opened higher and is below the previous bar's low. So that then becomes an engulfing pattern, and being that we are near the end of the day, we're just going to change this to engulfing. And for all of you people that get our patterns, our charts, and all that, then you note that we always put in these different candlestick patterns when we think they're significant. So our projection in here, you see, takes it down into February based on this pattern, right? That this is likely to be the top of anything on the upside, and likely to be more on the downside. And yeah, we're probably going to see demonstrations all the way through the inauguration or past then, so that could be a problem for the teen retailers. So not being critical of that, again, just saying that it could be an effect, the reason that it would be affected. Take a look at the daily chart in here when we look at this, and I want you to see this major kicker pattern on high volume. So if you go in and look at my videos on earnings gaps, I talk about ways to trade them on one video, and I talk about the fact that a high volume earnings gap or high volume gaps with big patterns like this generally are the beginning of something or the end of something. So it's the end of the rally, the beginning of the declining period I just showed you. Note the 89-day moving average. So here, same-store sales were great, and the stock went up big on this high volume. It was the beginning of the rally. Here, same-store sales suck, the big one, and then you get this big break over here to the 89-day. It is likely to mean more on the downside in Gap stores. There's your weekly chart again. Take a look at ANF. Their same-store comps were down 6%. That was bad. Now this one looks like it declines out into January also. This has been in a negative pattern all along, and it didn't get any better for sure. Our cyclical pattern suggests a decline into the end of the year in there also. You can see in ANF that this one has used this 89-day moving average as resistance all along. As a matter of fact, if you look at the periods of negative momentum and positive momentum, so you have negative momentum back that starts just before this, you get this big decline, you neutralize here, get positive momentum here, and you get this advance. You then get negative momentum. I'm big on momentum, you can see, and look at this. You get this big, long decline. We think another month in here of risk or more in Abercrombie, which we'll just say looks awful. Also in this group, Urban Outfitters and American Eagle Outfitters, for the same reasons, we believe that they're going to continue to struggle. We think there are topping patterns in there also. So since the Trump election, we've seen a continuation of weakness in the alternative energy type stocks. That would be solar, right? So First Solar gets a big hit. I want to look at this, down 9% on the week. The other solar stocks also weak. First Solar, take a look. This weekly pattern is just, whoops, I have the wrong chart up there, FSLR. Okay, there you go. Here is that weekly pattern. So we saw it as in this negative pattern. Why is it a negative pattern? Well, I want you to see when there's cycle support that breaks early, it declines all the way through the cycle low. Here was the cycle support right here. It comes up on a counter trend and tests it and breaks again. With all this time to go, this takes you out into January on the downside, down 9% on the week. Analysts are talking about their cash burn. I want you to see something else in here. I mean, this stock had 2016 earnings of like $4.25. There's a huge downgrade in the earnings projections here for 2017 to right now analysts on average are looking for 67 cents. I mean, that is massive, and that's why they're talking about cash burn. Their PE right now, after losing all this ground, is still 50 on a projected PE. I would say that's tons of risk, wouldn't you? First Solar really looking awful in there. I would say cash burn is something to be concerned about. CSIQ, I think it's got another month, and that's a stock that I liked a lot along the way. I've said that like 50 times, right? And that was one that I was pretty much wrong on all along because of how these solar stocks have suffered. The steel stocks, they've had giant moves thanks to the expected Trumponomics and all of the expected infrastructure that will be built based on it. They have run way past what I think makes any sense. And of course, when we get into the later past the inauguration, we may find that a lot of what Trump wants to do is going to take a long period of time, and some of the stuff actually might not get done. So that's going to make these stocks hesitate, I would believe. Let's take a look in here at ATI. First of all, was down about 6%. That was the worst one. U.S. Steel is up about 6% on the week, and that's the one that just turned bullish early on us in here, and we were looking for the low right around here, and here's where the DBB was supposed to turn up, right around that low, and you could see that, well, it finally did get its legs and moved up very sharply, moved above this level, coming up to this major 61.8%. Man, we think that is a risky spot for it. So in the worst of the week, we're bringing you one of the best stocks because, well, we think it's one of the best opportunities for pullback in there. I want to talk about one more group also, and that is the refining stocks. And for our level 3 and 4 members, you will note that we posted something in there on one of the stocks in the refiners as a trade setup. Tesoro lifted the group on Thursday as they bought Western Refining, and that gave people a sense that maybe there was value in the group, right? But then they reversed in a big way. Now, I think that the big issue here for the refining group and why we're putting out negative setups on there is because what I'm reading is that they have benefited margin-wise on the fact that there was discounting in oil. So they buy oil cheaper, actually than spot, and they then have better margins. That's the refiners, their biggest input cost, right, is the cost of oil. So they had some big declines when they got caught with inventory, and now when these discounts are disappearing, it's another reason that these stocks can pull back. Now, if OPEC pulls off anything to firm this up, and there's a period of where these discounts are gone, that says that there's a tightening in the oil market, and they might get a little lift in the oil market somewhere down these next few weeks or past that. I don't think it's going anywhere. I still think we're in a corrective phase, but just some minor upside, and the fact that discounts are disappearing is not good for the group. So I want to show you this group, and I want to show you Tesoro first, which did help these stocks so much yesterday on Thursday, giving them this big lift. The stocks that we look at in the group are TSO, Tesoro, Marathon, MPC, Phillips, PSX, and Valero, VLO. So here's that Tesoro pattern that we're going to look at, and here's what I want to show you. So here's the weekly patterns, and I want you to look at the point where the big cycle and the half cycle move into corrective periods. So that would be here, 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 and coming into it right over here. Note Tesoro, when that news came out, it got a rally and now has rejected with that big shooting star. You can see the shooting star here just as it set up 2 big weeks on the downside, and you could see each of these declining nested patterns brought you declines on the downside. So you're just starting in here, so we think that there's going to be a pullback in there. So that's some cycle theory that we're showing you. Take a look at the daily chart in here also, and you could see in here as Tesoro buying the Western Refining had that big uptick and then reversed and followed through on the downside. So what we're looking at in here is this pattern where it continues down in this cycle. It tries to bounce and then has another move down right over here. That takes you out about 4 or 5 weeks looking at these patterns. So we think it's topping in there. I want you to look at, well, I'm just going to hold back on PSX and MPC, but I'm going to look at Valero, VLO. and you can go back and look at those other ones if you want. So look at the rally in here in Valero as it gets up into this and just past this minor resistance zone. And now 2 weeks in a row it pulls back, as you can see that. And now also entering this period of 4 to 5 weeks of decline coming right in here. So when I say I'm giving you the worst of the week, I'm also giving you the worst of the week pattern-wise that gives you an opportunity. Here you could see a bear kicker, almost an abandoned baby right over here. In fact, it is a gap and a gap, leaving that single bar up there. I think it gets down into the minor support coming right in here in the area of about 58.5, 59.5. It's now trading at 63.40. So pull back over the next 4 or 5 weeks. I think Valero is in trouble, and that whole group makes sense, right? Get a little firming in oil. You get this discount going in their ability to buy oil cheaper. That hurts margins, and I think it's a good opportunity. That is the worst of the week, and I'm going to be right back with my short-term view. All right, we'll be at the short-term view in 1 second. Just want to remind you that all of these charts that you see, we do analysis on 400 different symbols on stocks and ETFs and futures. And there is an amazing amount of information in our charts. Become a level 4 member and you will get all of these charts. We update them on a regular basis and they're live on your TOS platform. And you get our rankings and trade setups and the 81 best symbols that there are. You'll never need any other symbols to trade, really. And then, of course, our 8 different categories of videos. All of that for really a reasonable price in our level 4 membership. So go check it out. All right, so our short-term view of the coming week, we look at light crude, we look at the gold market, the euro market, the treasuries, the stock market, and the VIX. And then we take an accountability of how we did in the previous week. We did not do so well this week. Big problem this week is, well, first of all, the election, the post-election moves have been so severe that we haven't quite gotten a lot of our cycle patterns to get back into their rhythms. Another thing is that the weak got weaker, the strong got stronger, and that what that does is that the momentum is so strong that it makes the cyclic patterns somewhat unreadable. So especially when we're looking for retracements, you know, where we're looking for bounces in the weak ones to sell, and we're looking for drops in the strong ones to buy, well, none of that has happened this week yet. So it's a scenario that happens occasionally, and then we have to kind of wait for the dust to settle. We're going to give ourselves at best 40% on the week, which is really a substandard week for us, and we expect to be back in the groove soon as far as that goes. So let's take a look at light crude first, our short-term view, and take a look at what we expected and what we expect for the coming week. So here is that light crude chart. We're looking only at daily charts, of course, because we are looking at the short-term view. When we do our work on our analysis, we often include intraday also in some of our indicators, but we focus only on the daily chart when we look at it in here. So there's some big patterns in here. Now I want you to see 1, 2, you see the 3 patterns right in there, the rally and the sell-off, right? Really clear, the rally and the sell-off really clear, the rally and the sell-off really clear. Follows the pattern perfectly, right? Just really perfectly in here. And then this runs late in there, long on the downside. So that had us kind of fooled. And we had expected that we would get a bounce in there and then pull back. So we have the pattern perfect in there, even though that ran a little bit late on us. But the upside movement was stronger based on the potential, the rumors of some kind of an agreement out of OPEC. So our notes have it basically drawn this way on exactly like this But this rally got higher. We expected it to stop at a minor resistance that was at about 44.50 and fail. But then you could see it actually moved much higher. And then, of course, we had the roll in here, which changed it by a little bit also. So, but then you get this big shooting star at the top. I mean, it was just a perfect touch right in there at that 50% resistance and this 89-day moving average. We think it's going to have a really hard time getting through there. We're looking for a down week, potentially touching this 45 minor support there, and we think it's going to come with some disappointment over this discussion out of OPEC. If it turns out that there's some news out of OPEC in advance of the meeting that's coming in 2 weeks, then it would be stronger, but we think that's a low odds. So we're looking for a down week in the oil market, and that's the weekly chart right over here, which I don't normally show you, but you see this yellow zone is the zone where we think that it is going to continue to struggle in, which goes for quite a number of weeks yet. So the next thing we're going to look at is the gold market /GC. This one was really much weaker than we expected it to be. We thought it would get a bounce in there and that it would then have a small up week. But that was, we said this is really bad, really negative. Any rallies are going to fail, and we thought it would get up to 1243, which is where the minor resistance was at the time. But the minor resistance was declining. It only got up to about 1231 and then rolled over. So we don't get much credit for this one because we said up week. We thought it would be able to hold this for a little bit of time and then roll over, but it rolled over earlier, and that is negative, even more negative. So we say intermediate pattern still very negative. We expect rallies to fail for the next 2 weeks. However, there is a support coming in here. There's an intermediate support at around 1201. Now, it got down to that level on Friday and then got a little bit of bounce. So we're expecting a narrow weak consolidation this week, but the downside risks are still really big. So this minor resistance at 1226 and the support right in here at about 1201, that's a narrow week that we're talking about, right? But that's what we think is going to happen. Stay up in this zone in here and then eventually roll over for a much bigger hit. Silver is coming up to a little bit of support also. So we're looking for this attempted bounce in here, but still really a weak looking structure that we're seeing in these patterns. The Euro /6E, no bounce at all. We said bad week, and we said any bounce would fail. There was no bounce in there whatsoever. We wanted to sell it at 109.70. So this little bounce in here was 108.30. It opened down on the week and went straight down. So we knew the kind of trouble it was in, and we've been talking about major breakdowns. So we were really negative on it, but we just did not get any kind of a bounce to give us the sell area. Now, if we get a bounce this week, we think, this is just in horrible condition, and we talk about it in our member videos that where it's going sub 100. And that means that you really have to look for bounces to sell. Maybe you get a bounce to 107.15. That's that minor 23.6%. And then we think it just gets nailed again. So this is really negative. We keep having to lower this resistance, and then we keep sending out interim chart grids so that people will have the updated resistances in so many of these, or supports, like in the stock market, which just keeps moving up because these things keep changing really by the day. So we've been sending out a lot of interim chart grids for our members. So that's a look at the euro, and we're just going to say that it's horrible. Maybe a bounce, big downside risk. Intermediate support comes in at 104.90, so that's about a penny 10 on the downside in here, and we wouldn't be surprised to see it in there. That's on the weekly chart, which I can't show you here. So that is the look at the euro. Now for the bond market /ZN, we didn't get this right. We expected that it would bounce for the week. It would have a counter trend. We said major downtrend and then counter trend bounce that we would get to sell. We didn't get any counter trend bounce. In fact, the only bounce came intraday. As you can see in here, this is a screaming negative pattern. We were looking for a decline for about the next 5 weeks on our interim pattern. Now it's about 4, and that's this cycle pushing down, that's this cycle pushing down, and you see we're getting to a support area in here. So I happen to have the intermediate supports marked off in here. You can just come right in here and you see that fib confluence. Amazing. That's a 4.23.6 fib confluence. I know that's hocus pocus, but you've got it mixed in with another 261.8, and that is a pretty good support area. So we still think we're in a major downtrend, and we think we're going to get some small bounces, and then they move down again. The reason for that is that if I switch this over to the ZBs, you're going to see the same kind of support in here, this fib confluence right over here, where it's getting a bounce from also. So we don't think we're going to make it to these sell zones in here, but it's possible if we get some kind of a bounce that it will happen, and this just ran a little long on the downside. If it did get up there to a 157.10, we think it would be a screaming sale. In the 10 years here, if it got up to this area of 127.20, we think it would be a screaming sale. So anyway, we just don't think that there is a lot of hope for anything but minor bounces here, and we're going to stay with being quite negative, and just a small week in there, because they're going to likely get a rebound attempt, and then that rebound attempt should really get them to the downside. So the stock market, no dips, right? The stock market has had just a ton of buying coming in. We've looked for the potential for some pullbacks. We talked about that last week. Forget that at all. It didn't happen, and we had this big move, and we think that this big move that we're seeing is going to continue and maybe even accelerate as the S&P 500 moves through the all-time high. Again, in our Wednesday show, Future Speak, you'll be able to see our projections in there. If you look at where the intermediate pattern suggests that this rally is going to go to, and what the intermediate duration is for the rally. So we talk about that in there. So we said last week that basically we had 3 different markets that we were looking at. The NASDAQ was weak as they were coming out of techs and multinationals. S&P 500 was strong, and the Russell was amazingly strong. And that has kind of changed. They're kind of all strong together right now. And there might be still some little bit of catch-up coming in the NASDAQ, but we don't think that that's going to be able to do very well compared to the other indexes, probably still be lagging. So let's switch over, take a look at the short-term pattern in the S&P 500. And you'll be able to get a sense for what has happened in these patterns. So what I'm going to go back and look at, I'm going to do something a little different now than we have done in the past, and that is I'm going to look at some historical movement to justify what I'm thinking about in the short-term patterns in here. So I'm going to show you where we are right now and why I think that there is more on the upside. So let's just take a look at the S&P 500 for this recent period. So of course we had that big decline, and we had expected that the decline would end out here. Note we said this was a high risk period, and then when we had Donald Trump elected, it took us out of this high risk period and into the Donald Trump market. Now, what I want you to note in here is that we have these repeating patterns. You could see the rally, the sell-off, the rally, the sell-off. It's been just absolutely dynamite as far as these patterns go. Now, we had this rally in here, right, and only this tiny little pullback right in here, and then moving up again. if this pattern comes in, it's going to give us a little bit more pullback. Maybe we get something down to 2179 right here or 2165 right here. That's a big maybe. But we think ultimately this move is going to continue strongly on the upside. Now, why are we saying that? Now, I want to look back at February, March, and June, July in here. So here is the February-March period. Let's just look at this rally right here. And what I want you to see is that the rally actually had only minor pullback, you could see, and then rallied straight through to the 15th or 16th day, and then it had a minor pullback and then rallied 15 days again. So that's what happens when you get into buying stampedes and these slim ribbons turn positive, as you see right in here. Now if I move that forward and move into the period of June, July off of the Brexit bottom, and I want you to see the same thing happened in here, right? You had this little bit of you had a rally, a little bit of a sell-off, rallies to the 15th day, a little sell-off, rallies again big. So that's what you're getting in here, is this extension of strength. Right now, this is an identical pattern. So this is like a 10th day off the low. It's likely to not give much ground at all over the next week. I'm hoping for a little bit of a pullback, but don't count on it. And more, you should count on the positive momentum, which has been established right over here, that this momentum is going to continue on the upside. So we are looking for just minor little pullbacks and maybe only intraday pullbacks, and then moving up for the S&P 500 through the old high at 2193, and then moving well beyond to maybe right in through the end of the year period or into the beginning of January, which of course is around the inauguration. So the pattern is very strong, immensely bullish. Being on the short side and fading this has been a mistake, and I've made some of that mistake. And I think that overall the momentum is screaming at us and says, be careful, because the upside favors the downside. When I look at the VIX in here, VIX, I was looking for a couple of days up and then down last week. You can see right over here that you had a couple of days up that didn't get you anywhere, right? And then moving down, this decline in the VIX points out to the beginning of December, so that's some additional analysis that coincides with this sense that the stock market is likely to be going on the upside still, as the fear seems to be coming really out of the market, and maybe not enough yet to get any big reversals, as all of these indicators simply say. So we're just looking for minor pullbacks and new highs in the stock market. That is it. Don't forget, look at our memberships, because if you're not a member now, you're missing some great analysis. You get a taste for that right here, but we've got huge depth in the rest of what we bring. I want you to be safe, because it's getting crazier out there. And I'm always wishing you great trading.